All right, the corporate real estate, folks, the bubble is about to burst, and it'll probably hit harder than 2008 did. By this time, you know, then you're starting to see how the government pulling the levers of the economy always has catastrophic consequences. We talked about this yesterday, about the Federal Reserve is in cahoots with the Treasury to run what amounts to little more than a Ponzi scheme in order to control long-term interest rates, which they have managed very poorly. And I'm going to prove it to you. Today, I'm going to show you the looming disaster that control has created as we dive into the corporate real estate market. Now, yesterday, we exposed how it was residential real estate that caused the 2008 crash, that the Fed was able to take control of these rates. But today, we're diving into the corporate real estate apocalypse. Now, corporate real estate is the engine of every major city, with sometimes as high as 50% of a city's tax revenue. This could be storefronts, office space, factories, multifamily homes, hotels, whatever, apartments. It contributes to well over $1 trillion a year to the GDP. But beyond that, because of legal loopholes, it provides tax incentives. It makes it a major source of investment, which is also known as growth. Case in point, Donald Trump, who made billions in it. In places like BlackRock and Vanguard and State Street, the largest investment firms in the world, use this as a safe place to park hundreds of billions of dollars. Now, remember we talked about interest rates yesterday, and I want to encourage you to go back and watch it if you didn't. This is why the federal government using interest rates to offset their wasteful spending is so dangerous. It's all coming ahead. Famed scientist, though, Sir Isaac Newton famously once said, "For every action, there's an equal and opposite reaction." He was right. And this perfectly applies to the economy. As interest rates were held artificially so low for so long, many people became accustomed to it. They built their business models around it. They leveraged huge loans for corporate real estate, and as Trump's economy boomed, thankfully, businesses expanded, creating more and more demand for office space. Now, the market became so competitive that it was running red hot. Then COVID happened. This from Politico article. In 2020, the next economic crisis, empty real estate retail space, they say they saw what was coming, and they nearly 3 years later, that headline rings true on nearly every single level. Look, the whole nation shut down. And those offices, those hotels, factories, whatever, they were empty. The all-knowing government lit a match for the next financial crisis that is now almost inevitable. Republican states like Florida recognized this and were the first to open. No surprise, they're not facing this issue as much. But big liberal states that locked down and even mandated vaccines like Manhattan did sentenced themselves to near fiscal death. Just hasn't happened yet. And even as they slowly opened back up, the damage had already been done. The previous stigma that was, working from home was a joke, that now became the new norm in COVID. Amazon executives and even Elon Musk, Jamie Dimon, they were all called everything short of dictators, simply for demanding their workers come back to the office like they used to do. Because of the remote work option, though, many workers left these big Democratic draconian lockdown cities and fled for more freer red states. New York City lost almost 500,000 residents and still counting. It was coast to coast, though. The overpriced tech hub of the world, San Francisco, was likewise crippled, losing 250,000 people since the pandemic and still counting. And now companies have stopped renewing their leases thanks to these lockdowns. And it's not just coastal cities. Far from it, actually. Look at this. The national vacancy rate was 17.5%, an increase of 260 basis points year over year. Nearly 20 out of the top 25 markets recorded an uptick in vacancies over the previous year. And that is because people are working remotely based on the shutdowns, which was a policy that the government instituted. But guess what? The people that own these buildings, whose income relies on those leases, still have to pay their mortgages. And banks rely on those mortgage payments to stay in business. Also from Politico, back in June, quote, some $1.5 trillion in mortgages will come due in the next 2 years, a potential time bomb as higher interest rates and spiraling office vacancies push down property values. You keep reading it. Continues, quote, and because 70% of bank-held commercial mortgages sit on the balance sheets of regional and smaller lenders, a write-down in commercial loans could spell big trouble for the financial system and spill over into the larger economy just as the 2024 presidential campaigns get underway. Even the Wall Street Journal added another level to fear to this crisis just a few weeks ago, writing, quote, with the commercial real estate market now melting down, those trillions of dollars in loans and investments are a looming threat for the banking industry and potentially the broader economy. Banks' exposure is even bigger than commonly reported. The banks are in danger of setting off a doom loop scenario where losses on the loans trigger banks to cut lending, which further drops in property values and yet more losses. That one phrase should really stand out to you. The doom loop scenario? And I'm not talking about climate change or anything. I'm talking about things that are actually happening. Let's take a look at exactly what that means. Right here, you have it. Start at the very top. Vacant offices means many workers doing their jobs from home. In turn, commercial leases, like we just said, aren't renewed, which sends property values into a death spiral, and thus the taxes on those properties, because you're taxed on the value of it, also take a nosedive, and it affects city budgets. But the city has to get theirs. So what do? Raise taxes in other areas, which cripple those areas even further. We're already strapped, folks. These higher costs decrease the appeal of these cities, leading residents to seek states that are cheaper to live in, usually red states, and an entire cycle repeats itself over and over and over again until you throw these people out of government or the entire city is empty. This perpetual motion downward was all started by government. Remember that $1.5 trillion worth of these loans that got to be paid in the next 2 years? That means that they will all be refinanced from the 2 or 3% that they got a couple years ago to the new current rate of 7.5%. So let's break that down. What does that mean? It doesn't seem like a lot, but if you have a $1.5 million mortgage on a commercial property that you got, you're maybe 2, 3, 4 years ago, your monthly payment on that is about $6,800 a month. That will now be refinanced as part of those $1.5 trillion at the current rate of 7.5%, making your new monthly payment about $11,400. That's an increase of $4,600, almost a 50% bump in the price for the same exact property. Nothing changed other than the interest rate. That means they have to raise their rents on their tenants. This is the doom loop. How is the store that is already suffering because of a bad economy going to afford another 50% in higher rent? They can't. So they're going to move, they're going to close, they're going to go out of business, and the dominoes will fall, just like 2008. Here's the problem again with inflation. Our government, over the last 20 years, created so much problems with this, from printing money to run massive deficits. We can't do that anymore. Not to say they won't, but if they do, it's only going to make the crash even worse. Now, they spiked interest rates to compensate for their printing. So what do? Well, these rich men north of Richmond, who never have met a foolish solution they don't like, are about to wear this around their neck in 2024. I find it kind of ironic also that this race for president will be between a career government guy with no clue against a billionaire real estate developer who knows exactly what to do. Think about that when you go into the voting booth.